Welcome guys, this is another installment on the Wyckoff accumulation pattern. This is another example. This one is on the Euro CHF pair. We're going to do exactly like we did in the last video. We're going to do a top-down analysis starting from the weekly and going to the daily and then the 4-hour, and then go into a smaller time frame to time the entry. So what I'm seeing here is that the pair has been in a range since mid 2011 up to now, and it's trading between these levels. But right now, if we zoom in a bit, we can see that we're clearly in a downtrend. And for this trade, what I did is I waited for a bounce. Originally, I had another I had a line drawn here, and I had a line drawn here as well. And eventually what it did is an overshoot like that. So then I had to delete these lines because I don't like to trade beyond that, and I ended up with that line. So that wasn't my starting point, but eventually it became the point at which the pattern was traded from. And at this point, I saw this kind of curve, and this is something that I look for often. It looks like a scimitar almost, like a sword at the end. And then I started really looking at it seriously. So if we look at the daily real quick, this is what it looks like. So I was seeing these bumps, and this is the point where it really gets my attention. So if we move to the 4-hour chart, this is what it looks like. So, and this is why I put it in the Wyckoff series, but really I should have named that series the accumulation phase, because it really, in the Wyckoff, it's supposed to go to the top here, and then again to these highs are much higher, but in my experience they're always lower, and you can always almost trace a triangle. And I'm gonna just trace my lines here. What I do is I look for the first stop. So let me just get this here. This is the pattern that I'm looking at. And I look for the first stop, and then that's my first low. And from there, I'm gonna draw some kind of triangle, which is going to be my support zone. And then between the first stop and the second top, I'm going to draw my second rectangle, which is going to be my resistance zone. And then when I look for an entry, like I was saying in the previous video, I ignore the first top. I usually take the second one and the third one, and then I connect them with a line. And that gives me my, and I like to go at the 50% level usually, but in this case it would have worked anyways. But basically this gives you a level of support for the future. In this case, it responded to the peak of the candles, but sometimes this body of the candle, when it's too big, then I take 50%. But it's a zone more than a straight line, so you can use it in other patterns. So what I do from here is I like to see that the low here, the E point, is lower than the C. So we have like 3 distinct waves. So this could also be called a 3 drives to a bottom. But let's stick with Wyckoff for now. So it did the pump after this after it touched the E, and then the dump. And this is the first point where I start entering that pattern. And then once the pump and dump has been identified, the other point that I like to see is I go back to the first high, and then I connect the high of the pump and dump pattern, which is here. And this can become my second point of entry. And usually when price is able to hold on top of that, I move my stop loss. This is where I manage, because right now if I entered in this zone, my stop would be below the E, but once it reaches another point of resistance and goes through it, then this becomes support, and then I can move my stop loss to a break-even point. And then from here, this is where you're going to see the SOS, the sign of strength, and you see this type of accumulation where you see a continuation pattern like a triangle usually, or a flag. In this case, it was a small triangle, a pennant, and from here you could have went long again at this point on the break. So you wait for a bar to close above the SOS zone or the continuation pattern, and then you can enter another lot. And then from this, we can look back at the daily and use that previous trend line, that previous resistance, as an exit point, as a first exit point anyway. So this created a, it went through it, but then got rejected right away, and it's been, for the past 3 days now, it's been going in a downslope. So just to recap, we wait for the 3 waves to be apparent. Ideally, we want to have the E wave smaller than the 2 other points, but it's not necessary. Sometimes they're equal, sometimes it's a bit higher, and then it's more of a reversed head and shoulder pattern than a Wyckoff. And then we wait for the first break. We connect the top of the B wave and the D wave. We wait for the break, and then it retraces. We get in, and then we trace our second line, which is from the first stop to the peak of the pump and dump pattern. And then we have our second entry. Then we wait for the accumulation phase, and then we have the break from that zone above the resistance zone that we traced, and that becomes the third entry point. And then we look for supports and resistances as a means of exiting our trade. So that was a really good example of the pattern working perfectly and how to trade it in a real life example. So I hope you enjoyed, guys. I'll see you in the next video. Take care.